Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Apollo tires. Should you buy at these levels or avoid it? So let's get started. First, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Apollo tires, a small request: can you support me on Patreon? Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. And if you cannot pay on Patreon, you can email me and you can get WhatsApp membership as well. And for detailed market or company talk or number of stocks you're holding, you can directly email me as well. Now about the company. Established in 1972, Apollo Hospitals Apollo Tires has major business in South, one of the biggest tire manufacturers, and they manufacture passenger as well as commercial vehicle tires. The market cap of the company has reduced and gone to 12,500 crores at the moment. Export operations are across the globe, at least in 100 countries. In terms of financials, if we look at it, sales in the third quarter went up by 11%. Profit actually dipped by 150%, and not went up by dipped by 150%. So that's a negative minus 150%. High debt, lower cost, you can say, led to numbers being a little bit better. Otherwise, numbers would have gone even worse, but now the cost will rise with increase in crude prices, etc. ROE at 6% and operating profit margin at 13% is reasonable but not very great. If you look at the stock performance, stock has been a non-performer for the last 12 months. It's down 10% in that period. Virtually it has done nothing. There have been many stocks that have done well since 21 February, March till now. But something like Apollo Tires has not done that well. It's trading at 15 times earnings, which is not very expensive. But margins have shrunk and there have been average return ratios. There have been decent dividend payout, but not a magnificent performer in this space. So basically the reason for that is crude price rise is a worry, and the way the crude is currently staged at $100 per barrel, I think it's going to affect tire manufacturers even more. Remember that a major raw material of Apollo tires or most of the tire manufacturers is crude and crude and crude derivatives. Global economy is picking up, but volatility persists. There have been war in Europe and a lot of things going on, a lot of skirmishes happening. And now with the dollar rupee equation the way it is looking extremely bleak for the Indian manufacturers or manufacturers in India, because of the higher raw material cost that they would have to suffer, whatever they would be importing. May remain under pressure as raw material costs remain elevated, and it should take at least 2 to 3 quarters for this to come back. So I think this year, at least for the next 6 to 8 months, I feel manufacturing companies, especially something that has crude as their major raw material derivative, is going to suffer a lot. Will do well when uncertainty subsides and crude lowers, but at the moment it looks extremely difficult. In terms of technicals, currently it is trading at 15 times earning. It has broken most of the support levels, have been consolidating for a while. Currently it is coming to major support. The next major support is around 170 180 levels. Those are good levels to probably buy at. Upside or major upside is expected above 210. So probably if you want to trade, then wait for 210 levels to be taken out with a lot of volume, or probably wait for 180 or below levels to accumulate. The stock looks extremely weak on charts, and any level of downside in the market could see the stock plunge towards 170 levels. So in my opinion, add on major dips, probably 170 180. I think auto industry should revive by next year. I had the opinion that it would revive by early this year, but it did not happen. purely because of the fact that the crude went absolutely awry from February onwards because of the global geopolitical situation. Now I think it will take at least a year from now for all auto industry and everything to recover completely. I think these are best time to accumulate auto stocks, etc. If you have a 4 or 5 year time frame, or more than that, between 5 to 7 year time frame. But there are other industries that are set to do well over the next 3 4 years and may just continue to do well. So it's a real risk to buy into manufacturing companies, to buy into companies which are more crude related. So have only 5% holding into such stocks and do not overstay your welcome in these kind of companies. So this was my video on Apollo Tyres. Please like and subscribe my channel, hit the bell icon so then get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.